So many of you may be wondering, why did Warren Buffett buy a stake in HP stock and after that the stock soared over 15%? Warren Buffett doesn't make stakes very often, but he made it this time yet again after making one Occidental Petroleum, which I covered. So in this video I'm gonna do a quick overview of why kind of Warren Buffett could have bought HP, and if we buy HP stock, what are we getting in terms of value? Okay, now HP is a pretty interesting company. Many people say it's dead. No, it's not dead, and it has a pretty lucrative business, which is something that Warren Buffett likes. Now, first, it has a personal systems, which actually has the notebooks. They have been pretty hot lately. They have the desktop, workstations, and many others. They made around 12.2 billion in revenue, and out of those 12.2 billion, they made 957 million in profit. Now, this is not bad at all, but this is where it gets very interesting. If you go down to the printing, which is their second biggest share from printing supplies, 64%. And here they made only 4.8 billion in revenue, but they made as much as they made here. Here they made 12 billion in revenue, which got them 957 million operating profit. Here they only made 4.8 billion and they got 879 million in operating profit, much higher margins. Why? Because first, it's cheaper to make, so they have kind of higher margins on those, and second, it's mostly a kind of a subscription-based model, which not many people don't realize that. Whenever you buy an HP printers, and they have pretty popular printers, many people opt in for the option for HP to kind of deliver those things for you kind of every single month, supplies and stuff, which accounts for 64% of revenue. This is pretty predictable business model, kind of a like direct to consumer thing, much higher margins than just selling desktops and computers. And I don't know about you, but I don't think printing is going away anytime soon, and they're doing pretty well in this area. Now, looking at the company itself, as you could see, they made massive cash flow in 2021, mainly because of the whole transition back to the office, out of lockdowns and all those kind of things. And they use those cash flows to make some acquisitions, but to also, most importantly, do a lot of share buybacks. As you could see, from 2020 to 2021, they purchased massive amounts of shares. And this is something that Warren Buffett likes. He always talk about the example of like Apple. He owned like, I don't know, what is it, 5% stake, and then it became like an 8% stake without him kind of buying any more shares. Why? Because of the share buybacks. And he likes that HP does a lot of share buybacks. They also pay like a 3% dividend. So that's a lot of cash flow, and they are returning it mostly to shareholders. This is something that Warren Buffett likes very, very much. Now, they do have some pretty amazing cash flow, but they do have some debt. Their net debt is around 3.7 billion. But the company is guiding 4.5 million in free cash flow for 2022 alone. So they can really wipe out that debt in just 1 year. So the debt is not a concern at all, and they have a pretty good cash position around 3.4 billion. With HP, it's not of a revenue growth story. It's more of having high net income or free cash flow, and then using it efficiently, returning value to shareholder over time. For example, the analysts, they expect pretty sustained net income and even revenues over the next 5 years, which I don't expect them to blow out those estimates. I mean, grow 10-15% a year. I don't expect that from HP. But again, they don't have to. For example, they're guiding for 2022 around 4.5 billion of free cash flow. Now, that's pretty amazing. Now, if you look at HP's market cap is 36 billion. Now, if they can sustain this 4.5 billion for the next 5 years, this is almost 50% of the whole market cap. They can return it to you in value, even if they make acquisitions, they could do other things. So as you could see, the company is pretty cheap on this basis. So you're getting pretty massive free cash flow. You're getting a huge share buyback program. You're getting around a 3% dividend on the stock, which Warren Buffett does like dividend from his investments that I've seen. And you also get all of that for only a 9-time free cash flow, or only an 8 PE if you like to use price to earnings. So 8 PE, I don't know about you, but for a company like HP with a sustained business model, like a direct-to-consumer thing with a high margin ink for the printers and stuff, I think it deserves a little bit more respect dividends than that. So you're getting, a lot of share buybacks, a lot of value as a shareholder, a dividend, and you're getting a potential multiple expansions if you buy HP today. It is sustained for the long term. They can return value to him as a shareholder, and it's a pretty safe investment with plenty of brand loyalty. For example, I own HP computer, and if it goes bad, I'm just gonna go buy another one. This is just me. Many people would go for something else, but this is what I would do. And many people are like me who are loyal to the HP brand and really like the HP products. So this was my thoughts on on why Warren Buffett bought it. If you liked it, please press the like button and maybe consider subscribing. So I hope to see you in another video.